Joined now by Peter Navarro, the director of the White House Office of Trade and Manufacturing Policy. We appreciate you coming in this morning, sir.
Good morning to you.
We know the labor market is strong. We know consumer confidence remains high. But on Wednesday, we saw the worst drop in the stock market this year. And although there was some recovery, there are indicators that the U.S. could be headed for a recession.
So before I came to the White House, I spent the better part of 20 years forecasting the business cycle and stock market trends. And what I can tell you with certainty is that we're going to have a strong economy through 2020 and beyond with a bull market, and here's why. Things are shaping up well. First of all, the Federal Reserve going to the holidays will be lowering rates significantly. What that will do is it'll help our investment directly. It'll help our exports indirectly through a currency effect. Secondly, the European Central Bank has signaled strongly that they're about to engage in a very aggressive round of monetary easing. That'll help not only revive the economy of Europe, but also help build export demand. I think China is going to have a second round of fiscal stimulus. What that'll do for the global economy is help the developing countries that sell them all the commodities for their manufacturing machine. By early October, if Congress rises above partisan politics, we should have passage of the U.S., Mexico, Canada trade agreement. This is, without hyperbole, the largest trade deal ever in history. It's also going to give us hundreds of thousands of more jobs, more growth points. And there's a couple of other things I should mention.
They seem like a lot of ifs. If this happens, if that happens.
The Fed will be lowering rates. The ECB will be engaging monetary stimulus. China will be engaging in fiscal stimulus. You're absolutely right. There is an if associated with the USMCA. There also is an if with Brexit over in Europe. This is important because that has suppressed investment in Europe. I think by October 30th, that situation is going to be resolved one way or the other. So things are shaping up well for stimulus worldwide.
Let me talk about these indicators, though, this so-called inverted yield curve. The yield curve has inverted before every U.S. recession since 1955. There was one false flag, even though it may be brief. How can you be so confident?
I love to talk about the yield curve. I didn't write the book on the yield curve, but I actually wrote several books on the efficacy of the yield curve as a leading economic indicator. And first of all, we do not have a yield curve inversion right now by technical standpoints. You have to have a significant spread between short and long run rates. All we have, Martha, is a flat curve.
I know you've talked about the flat. And again, if this was only a brief inversion or it was flat, you're still not worried about that.
But it is flat, not for bad reasons, but for good reasons. We have the strongest economy in the world. Money is coming here for our stock market. It's also coming here to chase yield in our bond market. Now, what that does is when foreign money comes in, it drives the prices of bonds up and yields down. That flattens the curve. So all that needs to happen here, Martha, is for the Federal Reserve to do what it needs to do, which is begin lowering interest rates. There's a general consensus now on Wall Street and everywhere else in this country that the Fed raised rates too far too fast. We came in at Q2 at 2.1% GDP growth rate. We should have been at 3%, and the Federal Reserve's precipitous interest rate hikes actually cost us a full point of growth. All we need, Martha, is to reverse that, have Europe do what they need to do, China do their fiscal stimulus, and the global economy will have a bullish cycle going through 2020 and beyond. That's my message to the American people.
Let me tell you what, as I'm sure you're well aware, the Wall Street Journal editorial board this month dubbed this the Navarro recession, and they wrote a second editorial this week called the Navarro Recession 2, saying Mr. Navarro and President Trump spent Wednesday blaming the Federal Reserve for the market meltdown, and we suppose any scapegoat will do in a storm. We've been warning for 2 years that trade wars have economic consequences, but the wizards of protectionism told Mr. Trump not to worry. The key to avoiding the worst is to restore a sense of policy, calm, and confidence. And I would add to that, businesses are not blaming the Federal Reserve. For example, the National Retail Federation explicitly said uncertainty for business and the new tariffs will result in higher costs for consumers and slow the U.S. economy. So clearly not everyone agrees with you.
So let's start with the Wall Street Journal. When the Main Street Journal starts attacking this administration, that is when we worry. The question for the Wall Street Journal is, where was the Wall Street Journal beginning in 2001 when China got into the World Trade Organization, and we watched the exodus of over 70,000 of our factories, over 5 million manufacturing jobs? Why isn't the Wall Street Journal been editorializing over the last 10 years about China's hacking our computers to steal trade secrets, about stealing our intellectual property, about forcing the technology transfer from our companies, about the currency manipulation that occurred for over a decade? So the Wall Street Journal, look.
We don't have a trade deal, though.
It's called the Wall Street Journal for a reason, okay? It represents Wall Street. And the Wall Street Journal never saw an American job it didn't want to offshore.
Well, let's talk about tariffs, which has consumers concerned and has businesses concerned. The president delayed some of those tariffs until after Christmas. Why would delaying tariffs help American consumers when the president and you have said that China is bearing the brunt of the tariffs?
I love this question. We have $300 billion worth of Chinese exports that did not yet have tariffs. So what the president did was looked at that, and as of September 1st, about half of that will be tariffed at 10%. Now, the other half, why didn't we tariff the other half? One of the things the president does beautifully is engage with the business community, labor leaders, and everybody in between. I was sitting in the Oval Office when a group of executives came in and told us this, Martha. All the stuff that they were going to have on their store shelves during the Christmas holidays had already been bought in dollar contracts. What does that mean for your viewers? It means that these people did not have any power to basically shift the burden back to China. So the other thing we heard from these business leaders was that just give us some time to December 15th. And by the way, we are taking all of our sourcing production facilities out of China, and we will continue to do that. And China, and that's why the president did it.
Are you optimistic about a deal quickly?
I'm optimistic that the president will do the right thing for America and that we have some significant structural issues with China that we need to address.
We'll have to stop there. Thanks for joining us this morning, Mr. Navarro.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.